Personal tax credits, I mean, these are reasonably straightforward. And I suppose, just in case there's anything that jumps out, I mean, the home care, most people are familiar with how that works. The employee tax credit, that is available. One thing I'd mention there that sometimes gets overlooked is if you cross-check that to a foreign pension or to a foreign employment, which is in the foreign income section that I just touched on earlier, a person in receipt of that is also entitled to the PAYE credit. So just make sure you claim that. What it actually says in the guidance notes is taxpayers who are employed abroad, they pay tax abroad on their earnings under a PAYE type system, are entitled to claim the employee tax credit. Just make sure you put that in. Guide dog, assistance dog, there's a couple of reliefs there. There is the earned income credit, which is kind of in parallel. If you don't qualify for the PAYE credit, you get the earned income one. The dependent relative credit is there. Employing a carer to care for an incapacitated individual, you can claim a relief of up to €75,000 for that. Permanent health benefit is there as well. It's the portion of the premium that's attributed to permanent health benefit that can be claimed. That's up to a maximum of 10% of the individual's income, and it's only the income cover that's brought in. Sure, so titled because it won't let you down. That's the startup relief for entrepreneurs. It's the old seed capital. There's a couple of minor changes in that from last year, and that's behind 177 of 23. If you have people who claimed EII, you may recall, and it's starting to wash through now, that if you go back to the period prior to October 2019, so in other words, budget day 4 years ago, there was this twin track thing, hard to say quickly, where you got 3/4 of the relief in year one, and then you got the remaining quarter in year four, assuming all the conditions were met. If that is the case, you probably still have maybe relief from 17 or 18 floating around that could be available to be claimed now in 2022. So it's worth checking to see if someone claims 3/4 of the EII in 2017 or 18, has that washed through in 21 and 22, and if not, claim it. And how you claim it is described there in the guide to completing the return. I don't think it pre-populates. I think you need to punch it in. As you know, a lot of stuff is pre-populated now, but I don't believe the EII is. I could be wrong on that, but I haven't seen it coming through. It might be just someone did it wrong in the first year, but certainly if there was a partial claim in 2018, the balance should be coming through this year. Tuition free fees is in there as well. For anyone with kids in college, it's worth checking to make sure you can claim that. It's up. There's a £3,000 limit, obviously. Single person carer credit, single child carer credit, that is in section 462B, and there's quite a bit of guidance on it for something that should be relatively straightforward. It seems awful complicated to claim it, but there is pretty good guidance on it. Incapacitated child credit, that's there as well. Employer paid medical insurance, there's a small bit on that. It's just how you claim it if it hasn't been picked up at source. The Fisher, there's a few reliefs that were brought in for Fisher persons, seafarers and naval personnel, just a little bit on how you claim them. The rent tax credit, I suppose, is probably the biggest new one, and there's a really good tax and duty manual. It's again behind 177 to 23, the revenue guidance, which I'll mention briefly in a second, just before I finish up and hand you back to Alan. But behind 177.23, there's quite a bit of guidance on that, and it gives details of the panel and the key bits of information you need to put in to be able to claim it. So if you have a child in, say, UCD or whatever, and you're paying rent on their behalf, either in college rooms or privately, that relief is there, and that relief is worth claiming. I think, again, there's a further change mooted in the budget stroke finance bill that's underway at the moment, but we're obviously only looking at Finance Act 22, so, the 22 returns rather. So the rent credit is certainly there and worth checking. Your marriage review is always worth checking. I think Alan touched on kind of joint assessment and similar earlier. The marriage review feeds into that. I think we had a gay couple of clients that got married, and they got married, I think it was in 21. So again, they got a few bob back when we did the year of marriage review. Donation to sports bodies, if you're self-employed, that can be claimed. And then it's always worth tracking your health expenses, because you'd be amazed how that builds up. And a lot of people, I'm sure most of you not, but there are certain people I know who don't bother claiming the pharmacy. The pharmacy is in the mix, so certainly worth claiming the pharmacy expenses if at all possible. I think they're the main, and the one thing to mention about health expenses as well is they are only available as a 20% credit, But the only one, if I'm not mistaken, the only one that is still available to be claimed at the marginal rate is if you have the misfortune to be paying for someone in a nursing home. So if someone is in a nursing home, you can claim at the marginal rate. Other health expenses, and the revenue guidance on there's quite a amount of detail in it. A lot of health expenses are available, and it's always worth checking if you are paying regular costs for things to make sure what you can claim under health expenses. And obviously included in that is non-routine dental. There is a real-time thing can be done, and I suppose you got to be careful when you come to claim to make sure the client hasn't already claimed it on a real-time basis. But assuming they haven't, you can just put it through on the Form 11.